In this video, I'm going to show you how I got paid to buy UPS. So this is going to be a live trade that I'm going to share with you guys because, as you know, I am the number one most transparent options trader on YouTube. So here I have a trade that I want to share with you guys, and let's jump right into it. So I saw a huge drop on UPS on May 4th, where the stock dropped all the way from 110 to 96. So I'm going to show you this on the chart, guys. So as we can see, guys, here, the stock dropped all the way from market close, which was the 1st of May, and it opened on Monday, which was the 4th of May. It opened at around $96, so it dropped all the way from 110 to $96, okay? I saw this massive drop in UPS and I immediately checked what's going on, and I found out that on this date Amazon announced that they're opening up their logistics service also for third-party sellers, which means that anyone else who's not even selling on the Amazon marketplace can use their logistics in order to ship their products. And the market was afraid that UPS is going to lose a lot of its customers because Amazon is going to take these customers over, and therefore the stock dropped a lot, okay? But this was a massive, massive emotional drop in the UPS stock. So the sell-off was highly emotional, as UPS is already trying and working on getting away from that business and that cooperation with Amazon, as the Amazon corporation is not as profitable for UPS as Amazon is pushing down the prices, okay? So I also found out that UPS is actually focusing even more on the B2B business and especially healthcare business, okay? So UPS is already trying to get away from that e-commerce logistics for a very small profit margin and is trying to establish itself and maintain its position more in the B2B logistics market and especially the healthcare market, okay? And these types of logistics are not as easy to just take over by Amazon, and UPS is very established here. So UPS already predicted this move by Amazon, and this was basically not priced into its stock price as it massively dropped, but UPS was basically prepared for that already. And most importantly, UPS is not a breaking business, so UPS's business was not breaking apart just because some competitor announced that they are going to open their logistics. UPS is still a very, very stable company, and the drop in the stock price of UPS was driven by emotions. So I saw this opportunity and immediately I sold on May 4th when the stock dropped. I sold a cash secured put on UPS at a $91 strike, which is actually way above the support level of UPS. I sold a cash secured put with the expiration date of 5th June 2026, and I collected $173 in premium, or $1.73 per share. And as we know, options always come in 100 packs, so for a total of $173 in premium I collected up front, okay, for making that commitment that possibly on the 5th of June I'm going to buy UPS at $91, okay? That is my worst case, that I'm going to be assigned 100 shares of UPS. And as we can see here, I'm willing to own UPS at $91 as UPS is paying an annual dividend around 6%, okay? So even if I end up being assigned, I will receive the dividend by UPS and I can continue selling my covered calls, okay? So that is actually my worst case here. So that's why I decided to sell a cash secured put on UPS. So I received $173 in premium upfront. That was deposited into my trading account immediately by the market. So I just collected a very attractive monthly salary on UPS. What happened then is that UPS actually went up a few days later, okay? Because as I said, the drop was highly emotional and these emotions kind of like went down and the stock ended up rising again, actually rising a lot just a few days later, where I decided to buy back my cash secured put on the 11th of May for $50 or 50 cents per share. Okay, so basically I made a commitment up here that I'm going to buy UPS at a $91 strike, but as it went up, my commitment became worth less because the stock moved further away from my strike price at $91. Therefore, my commitment was worth less and I can buy it back cheaper and get out of that commitment. Okay, so I decided to buy back UPS on the 11th of May, which is 7 days later, because I sold the cash secured put on May 4th and I bought it back on May 11th, okay, for $50. And I will show you this on the chart as well. So as we can see here, we had this massive drop on May 4th, all the way from 110 to around 96. And 7 days later, around here, on May 11th, the stock already went up all the way to 100 again, okay? So it went far, far away from my strike price, which was all the way down here around $91, okay? Here I sold my cash secured put, and as we can see, it went away from that strike price. So my commitment to possibly buy UPS became worth less because it is less unlikely that the stock will actually fall all the way down. So on May 11th, I bought back that commitment for $50 and I basically closed the trade. So to show you the calculation here, the total profit, in order to calculate the total profit, we have to take the original premium, which I received up front, which was $173 up here. And we have to subtract the money that I spent, because this money I received and this money, the $50, I spent for buying back this options contract. So we have to subtract that and we are left with $123 in total profit, okay? And if we want to calculate our return on our capital, we can see this calculation down here. We have to divide the $123 by $9,100 as we sold a $91 strike. And as we know, options come in a 100 pack. So 91 times 100 makes 9,100. And that leaves us with a 1.35% return just in 7 days, or a 5.8% return per month, and annualized 69.6% return on capital, which is insane, guys, okay? So as you can see, this strategy, the premium cycle, actually outperforms the performance of the S&P 500. And for transparency, I have attached screenshots here from the live account, which I'm sharing here on YouTube with you guys. You guys can see here that on May 4th, I have sold the UPS cash secured put and collected $173 in premium. And on May 11th, 7 days later, I have bought it back for $50, which leaves me with the total profit of $123, okay? So you guys can see here that I am actually deploying these trades, and the premium cycle is the best strategy for long-term investors who want a consistent return on their capital without risking too much and just want to generate a consistent income and profit from capital appreciation. The premium cycle is the best strategy. So you guys can join my community where I have a full course on the premium cycle strategy that you guys can watch, so you understand this strategy in detail. And also, we have a live chat where I am sharing my live trades, which I am placing, so you guys can benefit from that. So click the link in my bio to join my community, and I will see you in the next one.